Welcome to TheoTRADE. This is Don Kaufman. May 1st, 2024. Just about 15 minutes to go to the cash close here on this Wednesday afternoon. The Fed day is over, but clearly some of the fallout is not. Taking a look at the S&Ps right now. It's kind of ironic. You turn the screen on right this moment. What do you see? For the most part, the S&Ps are massively unchanged. Well, that could not be further from the truth of this trading session. We traded all the way down here like 50.40, all the way up to 51.20. I mean, that's an 80 handle move to the upside. Then we actually reversed completely off of it. I mean, just in the last few minutes, you've had a 50 handle reversal. And wait, there's more. As I said a moment ago, there's still about 15 minutes left inside of the trading session. Literally volatility breaking out all over the place. You know, right now, you'll see like volatility futures, they fell considerably after Jerome Powell speaking, but they're picking back up off the floor right now. That's a little bit disconcerting. You should anticipate that there was a lot of angst, a lot of volatility coming into, of course, this Fed meeting. And, you know, to talk about the Fed meeting is, look, it's passé at this point. Who cares? What did they actually say? Absolutely nothing. So why did the marketplace rally? I don't know. Conjecture that the Fed is going to ultimately not taper, their balance sheet as quickly as they have been. But again, a lot of conjecture around the a Fed announcement. It's neither here nor there. It all plays out in the order flow. But the second the announcement's out, you should see volatility fall. What is very unusual is volatility's kind of bidding back up. This is going to be critical into today's cash close because it portrays that, there's still a lot more risk to come. Speaking of risk to come, I'm going to start this evening's video in a rather unlikely area, and that's right here inside of the SPX. I think that this is instrumental right now in being able to handicap, what risk looks like for the remainder of the week. That's, well, just the last few minutes of trading session today, but into, of course, Thursday and Friday. So for those of you, if you tuned into the weekend video, you know the SPX is what I often term the mother of all products because it drives order flow to the whole marketplace. The SPX this week is expecting about an $82 move, so plus or minus 82. We sold off precipitously on Tuesday. Here on Wednesday morning, we actually clipped the lower edge of the expected move. And when I say we clipped the lower edge of the expected move, I mean, look at this. It is absolutely spot on, people. And that's exactly why I'm covering it. I mean, that lower edge of the expected move, it's shocking because last week I was talking about a shocking to the upside because we wrote it, but this is 50.17. Again, 50.17 right there inside of the SPX. We hit it, as I said, spot on, reverberated off of it. The Fed actually burst us back almost to unchanged on the week. You got to realize from here to here, and the reason I'm bringing this up, people, that's 82 handles. And, you know, I don't take lightly to that. And I'm not, how does that help me moving forward? I'll tell you how it helps you moving forward, Waves are big. Proceed with extreme caution. It doesn't matter, if the market closed right here, the S&Ps are massively unchanged. What do you think is going to happen overnight? I think there's an incredibly high probability, we're actually going to pull right back to the lower edge of the expected move. And the reason, that I'm saying that is bonds, they're destabilized again. They actually bid up and they actually faded. An overnight trade, if these bonds start to threaten a little bit lower, it's over. The dollar, check this out. So the dollar was actually about to break out to new highs. It pulled back a little bit, but this trade in here, this is sketchy. I mean, the dollar pulled back and then ripped again. Imagine some of the overnight trade. All it has to do is pull back a little bit higher. Let's put the nail in the coffin for this marketplace. It is sketchy. It is edgy out there. If that doesn't do it for you, take a look over at oil. collapsing down. Yeah, look at this over the last 3 days from the 84 handle into the $79 a barrel handle. Okay, taking the energy sector along with it. This is some of the biggest moves that we've seen lately. Everywhere you look in this marketplace, okay, is screaming volatility. That was the exact aspect that I was talking about on the weekend update, that the volatility is just, it's not done in this marketplace. And I hope everybody's like, listening at this point where that bid back, okay, you couldn't trust it. You shouldn't trust it. Right? Literally gets unwound in 1 day. And now we're teetering, okay, right on the brink. And this is why I'm bringing up the SPX. If later in the week, which includes, of course, just this Thursday and Friday, if you're sitting at that lower edge of the expected move, the whole week at that point comes down, okay, to like a make or break under, okay, that 5,000 level. And it is kind of a big round number. That's 5,000 specifically inside of the SPX. Granted, we're only 47 handles away from that, but 5,000 is going to be an absolutely critical level inside of the SPX. You start to actually lose, okay, this lower edge of the expected move. When I talk about losing it, if we break off lower within, again, Thursday, Friday, or even overnight trade, what will transpire is that all the big trading firms are going to have to hedge in the dynamic of the marketplace. And what you will actually see is a precipitous break lower in the marketplace. We'll come off. And again, I want to be really dead accurate with the levels in here. Okay, the lower edge of the expected move is 50.17. Breaking off does not mean that we're just breaking below 50.17. Okay, there are degrees of freedom over here. I'm going to actually average it to about plus, okay, or minus about $15. So you got to recognize that, within 50.17, there's some play to the upside and there's some play to the downside. You break through about 5,000 though, and I'll say this eloquently, all hell will break loose in this marketplace. You'll start actually seeing, okay, the gamma will slam us lower. And that's where we could actually see a critical break in markets. Now, in any given week, you have to still go with probabilities. Listen carefully. There's always a higher probability that we close somewhere in this expected move. Okay. And again, the bottom of that is that 50.17 level. Okay. It is a lower probability, but a break outside of this, okay, is so wildly significant that you have to pay attention. So, you can sit here and scream all you want. Well, there's going to be a 68% chance we're going to be inside. Of course, but a break below it, what it does is, again, it pushes everybody and pushes the gamma over there. Everybody has to hedge in the dynamic of the marketplace, okay, and we'll crack. And it'll literally feel like something broke in the marketplace, right? Be aware of it. Even though it's a lower probability, it is a significant threat at this point. And, I hate myself for actually saying, oh, it's like a lower probability, because I'm going to tell you right now, looking at the screen, might be a lower probability, but it is fully my opinion of what I would anticipate. Why? Take a look no further than NVIDIA, okay? There's real selling going on inside of here. And you're like, well, how'd you go from the S&Ps to NVIDIA? Because that's a little bit of a stretch. NVIDIA, it is the product that got us here. When we start talking about, big tech stocks and the year-to-date percentage returns, you realize NVIDIA is still up about 73% year-to-date. It's unscathed. I know NVIDIA it's in correction territory here. Well, it bid back up. Okay. NVIDIA, though, has been under pressure all day. If you start looking around, though, obviously look at something like Tesla. Who cares? Still down 30% in a year. Meta, you're like, oh, Meta, well, whatever. Meta's only up 27% on a year-to-date basis now. It already got slammed. Google, hurt me. It's only up 18%. Okay. Amazon, up about 20%. All right. After its earnings, big nothing burger over here. Apple, down about 8%. It's got earnings coming. But you know what? Apple is not going to help you. Apple is not this is not the AI trade you're looking for. And then, of course, Microsoft now is barely up on the year. How interesting it is, because, and then there was one. Okay, and this one stock holds on to a lot of that NASDAQ, but it is going to be a key representation of what the S&Ps are likely to do. And again, you'll note, as the S&Ps are under pressure here into the cash close. All right, NVIDIA on a percentage basis, It's significant. It's significant also as well. If you look at it on a weekly basis, it literally is on the lower edge of its expected move. How ridiculous is that? Right? I mean, just perfectly sitting on the lower edge of the expected move. Here's another one where you could see, again, a critical breach lower. Now, all of this aside for a second, let's go back to the S&Ps. As you're looking into the cash close here, there's still about 6 minutes. I mean, this looks like yesterday. By the way, if you guys missed yesterday's close, absolutely horrendous cash close yesterday. I mean, this is some of the most volatile trade that we've seen year to date. It all transpired in about 10 to 12 minutes, but we were trading 50.95. Okay, and dropped into the cash close, literally, almost 40 handles in a matter of a few minutes. The reason I'm actually bringing that to your attention, okay, it's not to show you like horrendous trade, it's to show you volatility, okay? It's right here, it's right in front of you, okay? And volatility is incredibly hard to handicap. What you do in volatility is you look towards stuff like the SPX. Look at this, okay? We are coming home. I mean, we're coming home. We're going to hit this 50.17 right into the cash close like the marketplace is drawn to it. I'm telling you, that is the demarcation line for the remainder of the week. And even though I want to sit here and tell you, oh, there's a higher probability we're going to close up here at the end of the week, okay, that dark side is very, very dark. Again, we are right at the cusp of a significant breach lower. And if you're curious as to when I'm going to sell options premium, it's when I am good and ready. But no, I'm going to sell options premium when we have a significant breach. Volatility starts to rip. Speaking of volatility, we knew something was up. We started actually shooting this video. Look at this. Volatility right now, you're going to love this, is right back where it was when Jerome Powell started speaking. You want to talk about chaos in the marketplace. This may hurt a little bit, but that first step into volatility land is getting chaotic. Markets are really starting to feel a pinch of vol at this point. All right, with that, again, bonds aligned to break lower, dollar aligned to break higher, okay? Volatility futures, one last read over here with a couple of minutes left. We are about 30 to 35 cents away from actually flipping into a backwardation. People, forget about earnings. Starbucks got annihilated, doesn't matter. Apple is coming, does not matter. Okay, only thing that's going to matter at this point, you have economic bombs that are about to hit the tape, a marketplace that is on edge. Anticipate the extreme. Tune in first thing tomorrow morning to TheoTRADE Live. I will be on talking through some of the volatility that we're seeing. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.